Shares of Tesla are under pressure after its latest results. The electric vehicle maker beat on both the top and bottom line, with revenue up 47% and delivery of vehicles above expectations to a record 466,000 cars. But margins, they came in below expectations and hitting a 4-year low. Elon Musk warned that there could be further price cuts for its vehicles, and that could put a crimp on margins. Let's bring in Hatem Dhiab. He's a managing partner at Gerber Kawasaki. Hatem, thanks so much for joining us. So is Tesla a market share story, or is Tesla a margin story?
Hi, Amber. Good to see you again. I think, listen, it's a market share story. They are really trying to keep growing their market share, not just on the EV space, but in the overall car market space, and they're doing a good job there. What people don't understand about Tesla ultimately is they keep innovating, and really by innovating, they keep reducing their cost of producing these cars. And yeah, margin got squeezed because they had to reduce prices, but ultimately, with more market share, they're going to keep being profitable and even making more profits going forward.
Perhaps the concern about margins is that Tesla will start to resemble more and more the incumbent auto part makers, that once you start engaging in price wars, this is sort of the beginning of the end when it comes to, the wide margins that Tesla has enjoyed, which brings me to kind of the follow-up here is like, Tesla, does it have the luxury of doing this and then extracting larger margins down the road from its installed customer base?
Listen, Tesla is worried about increasing capacity. It's a growth company, and they're investing in their growth. They just filed in Berlin new plans to increase their plan to make about 1 million new cars. So I think what they're trying to do right now is really figure out the right price for them to sell as many cars they can make, and they had a margin to give. That's why they were able to reduce the price of their cars. So at 18%, I'm definitely not worried about it. Most car companies have, 3-4% margins.
Earlier, I talked with a guest who's very bearish on Tesla and says the stock is, I think, either worth $26 or $28. Either way, it's significantly below. You might be familiar with them, the head of New Constructs, who's just saying this is a stock that is pricing in just a totally out of this world sort of type of growth. How do you respond to that?
I may have talked to that guy. Listen, it's silly. This company is doing $100 billion in revenue this year, or at least their run rate's $100 billion. That's a very exclusive club to be in. They're building, 2 million cars a year. They have, 65% of the EV market, and about, and it's just getting started. I think the adoption of EVs is only 6 or 7% of a market that's 100 million cars a year globally. So this story is just really getting started, and I think Tesla is just the leader by years.
Just to underline that, 4 years ago, we're talking about margins. 4 years ago, revenue was $24 billion. So it's not like this has been a slow slog to $100 billion. You're absolutely right. I mean, it's astonishing the amount of growth that happened in a short time, but didn't actually occur in a short time, right? The seeds of this were planted more than a decade ago.
Yeah, and investors should not look at just 3 months, right? They should look at where this company was 5 years ago and where they're going to be in 5 years, right? Tesla is growing their top line by 50%. They grew their car production number by almost 75% last quarter. So I think the reality is they're looking, the next 2, 3, 5 years to either double or triple the production, and the margins I think will follow. I mean, even if they do 18 or 19% margins on $200 billion or $300 billion in revenue, think about how much profitable the company will be.
So much of consumer companies is looking at the demand side, but the equally important, if not more, is Tesla's production side of things and ensuring that and this is where a lot of the EV makers, that's why they have plunged. It is because of their inability to get it done with respect to actually building these cars, getting them off the lot. How would you characterize where Tesla stands today?
Well, I think Tesla, from a manufacturing standpoint, is so much further ahead than anybody else. A lot of the innovation doesn't just come into the car, but in the process by which they build these cars. They have the single casting thing. They have the software innovations, the way they service the car, the way even they sell the cars, right? Direct to consumer, very easy. App is really seamlessly used. So I think all these things kind of come into play, and that all that basically makes for frictionless ownership, and also the ability to increase margins because there's a lot less middlemen in dealing with them.
Stock's already up so far 100% this year. It's about 30% away from an all-time high, call it 35%. How much more upside could there be?
It's a growth company, right? If they keep growing their top line and their profits, which they're fabulously profitable company at this point, this stock could go much higher. But valuations do matter, right? So you had a stock that ran up 100%, for it to give back 5, 10, 15%. That's very normal in the normal kind of stock market behavior. So I don't think people should worry that much about a little pullback here and there, because profit taking just happens.